Ricken Financial presents Kickin' with the Rickens, Redefining Retirement. Gerry Ricken and Heidi Ricken-Provost want to help you reach the retirement you deserve. Let's build a strategy that gives you the confidence while meeting your financial wants and needs. Meet the team at rickenfinancial.com. Now, Kickin' with the Rickens.
Indeed it is, and welcome back with Gerry Ricken and Heidi Ricken-Provost. I'm your co-host, Doug Turnbull, and this is Kicking with the Rickens, Redefining Retirement. And if you're tuning back in, these are our first new episodes in 2025. You heard 2 bonus episodes the most recent times, and I really recommend going and checking those out. One of these, Gerry, you and I got to just sit around and shoot the bull, all right, and not shoot the end of my last name, all right? But we talked about Germany and getting to know each other a little better. And then I love the episode that came out after that, too, because Heidi, it was a wonderful episode of you paying such tribute to your dad and talking about why you got in the industry. So, and that was with our previous host, Mark Owens, who's just incredible. So be sure to check those out. If you didn't hear the one with Heidi and Mark the first time, that was a repost, and then the bonus one with Gerry and me. But how y'all doing today?
You know, we couldn't be happier.
Absolutely.
We're back in the office.
Yeah.
The world is truly back to normal. We thought we were getting there last week, and then Winter Storm really put a wrench in those plans. We'll talk on the next show a little bit about your adventure there. But you guys got to basically start off the new real working week of the year, making a trip down with some of our folks, my parent company here, Impact Partnership, to Atlanta. So how was that?
Oh, my God, it was awesome. Well, first of all, we got to see you in person, so obviously that made the trip.
Yeah, it's always good to see you in person, Doug.
I loved getting to hang out with you guys. Y'all are so much fun, and I don't think people realize that, they think it's just talking. They're just sitting around and talk finance, but y'all make a time of it. You get the most out of these trips.
Oh, absolutely.
Well, we treat you because, as we've talked about many, many times, our business is about relationships, and that doesn't stop with just our clientele. It goes to Impact Partnership, everyone who supports us to make sure that we do the right thing for our clients. We have so many personal relationships at Impact Partnership in Atlanta. I can't even count how many we have.
Well, exactly. And you guys are not just our partnership that works behind the scenes helping us out with everything from this podcast to our marketing to compliance to
doing research on different products and services.
And sales support and all of this. You're our family. And,
that's right.
It's always fun to spend time with our family, but, who do you learn the most from? Relationships with your family. And, when you need to be pumped up, you go to your family for support, and it's no different here with Impact. So it was awesome. We had a great time. We learned a lot, and I got to meet one of my idols. Impact made it happen. Coach K, and I believe it, as the MC said, this is the first time in my career I can say this man needs no introduction, and it's true. I mean, Coach K, when I was coaching lacrosse back in the day, I looked at a lot of his principles of coaching, and what a hell of a guy.
Yeah.
I mean, and he talked about his principles. He talked about the principles of life, and it's no different in any situation. When you're building a team, that team can be your family. That team can be your coworkers. It can actually be a sports team. But all those principles he applied are so true and so relevant in our daily lives. It's very inspirational the way he talked about it.
It was also awesome hearing him talk about his faith being a component of it too, because we happen to share the same faith. But, how often do you get to sit in a room with 120 or so of your really good friends and be inspired by someone that you've looked up to forever, and then get to know him on a personal level? Like, that was awesome. But that was just the tip of the iceberg, because you guys also brought in, fun fact, when I was in college at Kansas State, I was in the leadership program, and we have our own college of leadership at K-State. And as
the first in the nation, by the way.
Yes, it was the first in the nation.
Okay.
As a junior and senior, if you're in this program, you have the opportunity to apply to teach the freshman Intro to Leadership courses. So I taught those freshman Intro to Leadership courses, and one of our inspirations we looked to inspired the brother duo that we got to hear from this week.
Brent and Kyle Pease. Yeah.
Exactly. Brent and Kyle Pease are absolutely unbelievable. Kyle has, is it MS?
No, he has a palsy, a spastic quadriplegic palsy. Yeah, so basically all four of his limbs, for those, and I'd never heard of this term before, but basically all four of his limbs are wrenched, so to speak, like that he can't use them properly, and so he's in a wheelchair and needs 24/7 care, basically. But that does not hold him back, as we learned.
No, that was an amazing experience listening to them.
You know, his brother physically carries him on these Ironmans and doing all these endurance sports together. And I mean, how unbelievable. If there was a dry eye in that crowd, it's because they don't have feelings, because
or a pulse.
Yeah, exactly. Seriously. Maybe we need to call Kriegshauser Mortuary for him, because that was unbelievable. And hearing from those two, I mean, nothing can set you back other than yourself. You know, the sky's the limit, and we're capable of doing so much more than we allow ourselves to do.
Well, for sure. And I mean, you guys, they were the leadoff basically on Wednesday night. That's when I was there and getting to hang out with you all. And Impact thought so much of them that they brought them to our employee kickoff 2 days before that. So I was thinking, oh gosh, I'm going to hear the pitch again. I mean, it was really nice, but I don't need to hear it twice in 3 days. And they actually had different stories. I mean, about running the New York Marathon and pulling the wheelchair, and the ropes were coming apart and all of that stuff. And, you know, I'm really glad that you all got to see two different versions of inspiration there, not to mention all the other networking and business building that happened over what ended up being a truncated event because of the winter storm that came into Atlanta on Friday. So we had a big kickoff here in Atlanta. It was inspirational for both the employees here at Impact and the different financial advisors like yourselves. And that's a great lead in to what we'll talk about in the second half of this episode today, which is basically kicking off 2025, planning financially, and especially all with taxes.
Oh, yeah. Too often we're sitting in these conversations with clients, prospects alike, and they're saying in December, okay, now I'm ready to do tax planning for this year. Well, just because December 31st is the deadline for everything does not mean that's the month we begin tax planning. So what we want to talk about today is starting the year off strong, because if you don't begin in January with quite a few components of your tax planning for the year, you are missing out on a lot of opportunity here.
Well, you really are. And one of the things that comes to mind is a lot of people want to talk about Roth conversions at the end of the year.
Oh, yeah.
And when you talk about Roth conversions, you convert from a traditional to a Roth, and you pay your tax in that year so that you have the opportunity to grow that Roth tax-free in retirement. So you can use those funds tax-free and never pay tax on them again. So when people come to us, they say, oh my gosh, we need to get this done before year end. Well, we want to get it done in January, because if you get it done in January, you have the entire year to plan for the amount of tax you're going to pay on those funds that you're going to convert. And the other thing is, you'll have the opportunity to grow, and hopefully that fund does grow. Whatever you convert will grow during this next 12 months. And if it grows during the next 12 months, why not have it grow tax-free as opposed to tax-deferred? And you're only kicking the can down the road in another 11 months until December, and then you decide to convert. You've missed out on 11 months of tax-free growth.
Yeah.
So we want you to focus early on. And some people say, well, you know, we just don't know our tax position until the end of the year. We can do estimates, and we can shore that up in December. If you need to convert more in December.
We do what we call a swag, a sophisticated wild ass guess. And we can swag this together, because you can get very close with your tax figures, and we can look forward for this year. But Gerry is so right. If you wait till the end of the year to convert, you're still kicking the can down the road. If your goal is to pay less tax in the future, convert those traditional to Roth as early as you can in the year.
That's right. That's right. And a lot of people say, well, yeah, but, you know, I'm going to have to pay those taxes. Well, a lot of people budget very well. Some people don't budget very well. And if you don't budget very well, you need to make sure that you have enough time to focus on the taxation and how are you going to pay that tax. And if you overpay tax, you'll get that back. If you underpay that tax, you'll have an opportunity to shore that up, as Heidi said, at year end.
And fun fact, if you're under the age of 59 and a half, you have to come out of pocket to pay those taxes when you're doing the Roth conversion. But if you've hit 59 and a half, your funds that you're converting can actually pay the tax for you.
Interesting, because by that point it's not behind the tax wall, so to speak. It's not behind the retirement wall. You can use it in everyday life tax free. So
absolutely,
you can just that's an interesting point, and that's something better to consider as well. Knowing, hey, because I've got money that I need to convert, for instance, and I'm under 59 and a half. That's good for me to know that I do need to plan for that. So how do you help someone plan for paying that out of pocket?
Well, you simply look at what your tax situation is going to look like throughout the year. And when we forecast the amount of taxation that will be caused by the traditional IRA, you can do what's called estimated tax payments that you pay in quarterly throughout the year to try to break it up a little bit. And then at tax time, I personally like to owe a little bit versus getting money back because, as we'll talk about in a future episode, there's a lot of scams out there and people can steal your identity at any point in time and create a false tax return. And I don't want you to have to wait 6, 9, 12 more months to receive your tax refund when you go to do your tax return. But, you just simply have to plan to budget for that. And we'll only convert the amount that you can budget to pay that tax.
And I like to owe as well at the end of the year because I believe that I can handle my money better during the year than the federal government can handle my money during the year. So I'd like to keep a little bit back, owe them a little bit, as opposed to, so many people, it's a misnomer. Oh my gosh, they're so excited about getting a tax refund. Well, that's your money that's out there.
Yeah.
Oh, yeah. So, that's just one thing that we can proactively plan for the year. But let's talk about something that can really, truly make an impact in your lives. If you're retired and you're of the age that you're getting those required minimum distributions, those RMDs, where once you hit a certain age, and it's based upon the year that you're born, for most of us, it's going to be 75 at this point in time.
For the people right now, it's 73.
Yeah, for people right now, it's 73. If you're born after 1960, it's the age of 75. The government tells you have to take a portion of your traditional funds, those traditional IRAs, 401ks that you've set aside for the future to pay tax on. You have to start taking a portion out as income each year to gather some, income revenue from it in the form of taxation. So if you're taking your RMDs right now, a lot of people will just say, I'll take them quarterly or semi-annually, or I'll just wait till the end of the year and, tell me what I have to take now. It might be wise to start drawing your RMDs in the beginning of the year. And why is that, Gerry?
Well, because if you give at least $1 to charity, to a 501c3, your church, your, any charitable organization, if you give at least $1, you have an opportunity to not pay tax on that dollar and get that. Actually, it's, most people don't itemize anymore. They're just, the standard deduction is out there. So you don't get the charitable contribution deduction that you used to get, but you actually get, in essence, a charitable contribution for every dollar you put into a 501c3, a charity, in the form of a required minimum distribution. It's a dollar for dollar offset of your income.
So that's called a qualified charitable distribution, or a QCD. And if you wait until year end to take your RMDs and throughout the year you've been giving money to charity, you can't take advantage of the QCD for the money that you gave to charity.
You can't make a retroactive QCD, in other words.
Exactly.
Correct.
You have to, if you follow the law, which we do when it comes to taxation, you have to receive the funds first and then pay them out to charity. Or the cleanest way to do it is to have whoever is the custodian of your funds right now to cut the check directly to the church or charity of your choice. But you can still do that in the background if you have a paper trail showing that the money comes and hits your bank first and then goes out to that charity. So you have to make sure you're taking those RMDs throughout the year and not waiting till year end if you want to take advantage of a QCD for a portion of your RMD.
So a lot of people say, well, how do you do that? And we have the opportunity to do that monthly. And a lot of people do it monthly because, they give to their church every week. They do things on a monthly basis. The Girl Scouts will come around and they'll give them a contribution in addition to what they purchased the cookies for. So all those things are happening throughout the year. And if you're having monthly required minimum distributions coming into you, you can show, on paper that the money came in and I gave it to charity. The money came in and I gave it to charity. But as
for
Heidi
that
said,
matter, if you want to take one annual distribution,
take it in January.
Yeah, take it in January. No one's telling you have to wait till December to do it.
Right.
That's just the deadline that you have to take it by then.
That's right.
Yeah, and then you can plan for the implications. You can figure out where to spend the money, do all that instead of trying to do that in the last 2 weeks of the year when you're in the middle of Christmas shopping and all traveling and all that other stuff. I'm sure a lot of money falls between the proverbial couch cushions when that happens. So,
oh yeah, just do me one favor though. If you take it in January, do a little proactive planning before you spend every dime to make sure it's not going to cause more tax and all that other jazz,
yeah.
Just make sure that you know what's hitting your bank account, what can get spent, and what needs to be saved for the future.
It's all about planning.
Yeah.
Yeah, all about planning. So with that being said, I mean, we've talked about tax planning and RMDs and so forth here and how to kick off the year the right way, not waiting till December. If somebody's hearing this and they feel like, gosh, I'm going to need some guidance doing that, and how do they interact with you and how can you help them start the conversation?
Absolutely. Well, you can pick up the phone if you're like me and you like to talk and call us at 314-442-6476. Or if you prefer, to send something out digitally, just head up rickenfinancial.com, RICKENFINANCIAL.com. And you will see, you can contact us on any of the pages on our website, actually. You could just scroll down and say, hey, here's my name, my number, my email address, and here's what I want to chat about, and we'd be happy to talk to you. I always joke, but if you want to send a carrier pigeon, whatever works for you works for me. Our address is there if you want to send a letter. You'll find all of our social media profiles. We can be reached a myriad of different ways, and we're here to help in any way we can.
Yeah, I love your Facebook and Instagram profiles for Ricken Financial that not only highlight the very important financial information, but show a little bit of the fun you have and great ways you treat clients too. So be sure and check those out. And know that this podcast is on Apple, Spotify, iHeart, other podcatchers, and the audio version of it's on YouTube as well. Gerry, do you have something there? I thought I heard you about to open
I
the mic.
just wanted to just say, just reach us. There's so many various ways to reach us. Just reach out. Don't wait.
Yeah.
If you wait, it may be too late.
And just we know that especially when we're talking about our finances, this is tough. And so many people get paralyzed in the fear of the unknown. What are we going to talk about? We're not here to drastically change your life in any way. It's not going to cost you a penny. Every consultation that we do is complimentary. Just reach out. The worst that could happen is we have a conversation and decide it's not a good fit. But, we're here for anything, and we'd love to just have a consultation with you complimentary and see if there's anything we can do to help assist you moving into your financial future.
Yeah, and when you come here, don't be afraid to share information. And we're in a no judgment zone when you're here.
Yeah.
We're here to help. We just want to make sure that you're exposed to the information that we know.
Mm-hmm.
That could probably be a whole separate episode. Don't feel like you have to have shame because you have this much debt or you did this the wrong way. Every day is the start of a new day, right? Well, listen, Gerry and Heidi, they're both here, y'all, to help protect and preserve the retirement you deserve. They're serving the St. Louis area or thereabouts. I'll just say it one more time. rickenfinancial.com is where to find them. You can hit them on social media or dial them up 314-442-6476. And before we get out of here, we got to start 2025 off the right way. Every day
is a holiday,
and life is short.
Laugh hard.
And that we certainly do. Thank you all so much for listening to Kicking with the Rickens, Redefining Retirement. They are Gerry Ricken and Heidi Ricken-Provost. I'm Doug Turnbull, and have a wonderful day. We'll talk to y'all soon.
Insurance products are offered through the insurance business Ricken Financial LLC. Ricken Financial LLC is also an investment advisory practice that offers products and services through Impact Partnership Wealth LLC, a registered investment advisor. IPW does not offer insurance products. The insurance products offered by Ricken Financial LLC are not subject to investment advisor requirements. Investing involves risk, including the potential loss of principal. Any references to protection, safety, or lifetime income generally refer to fixed insurance products, never securities or investments. Insurance guarantees are backed by the financial strength and claims paying abilities of the issuing carrier. This podcast is intended for informational purposes only. It is not intended to be used as the sole basis for financial decisions, nor should it be construed as advice designed to meet the particular needs of an individual situation. Ricken Financial LLC is not permitted to offer, and no statement made during the show shall constitute tax or legal advice. Our firm is not affiliated with or endorsed by the U.S. government or any governmental agency. The information and opinions contained herein provided by third parties have been obtained from sources believed to be reliable, but accuracy and completeness cannot be guaranteed by Ricken Financial LLC.
Please remember that converting an employer plan account to a Roth IRA is a taxable event. Increased taxable income from the Roth IRA conversion may have several consequences. Be sure to consult with a qualified tax advisor before making any decisions regarding your IRA.